Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Tuesday, September 22nd. Firstly to gold futures, and here we see the very strong selling coming into this market today. A larger black body than the previous day's trading. The previous day's trading set the market up as a potential change of trend, a potential bearish harami pattern, and we have seen confirmation of that today with the market making a lower high and a lower low. The previous day's trading and the day prior to that, we also saw price rejection from above or very close to the top of the Ichimoku cloud, and we've seen continuation of that rejection today with the sellers closing with control, finding very strong downside momentum, and importantly the market testing above the Kijun-sen resistance around this 1133.9 level and being rejected from there. So the market attempting to change that trend in that medium term time frame but not able to do so, and it says something about the lack of strength of the buyers. Importantly, however, the market tested just around this 1124 level of previous support and resistance, just closing through there, but also finding some support very close to the Tenkan-sen indicator around 1120. There is potential for continued downside, but the market would need to breach through that 1124 region and down through the Tenkan-sen. If the market does trade lower, looking to support down at the bottom of the Ichimoku cloud over the next few days around the 1110 area. Next with the bands with gold futures, and here we saw the market previously being rejected from above the bands, and now for today finding resistance at the upper band and support at the middle band. So very strong resistance, strong support. We could see this market go either way. If we do see selling looking to the lower band 1111 to hold a support, or if the buyers do come into the market, watching the upper band very closely as an area of resistance, trading at the moment at 1133.5. Next to NYMEX oil, and here we see very indecisive trading today, a very small bodied candle as opposed to the large white body of the previous day and the large black body of the day prior to that. The market is attempting to make its mind up. We have the market trading within the Ichimoku cloud, so indecision in that longer term time frame, and we have congestion area developing. Now the area of congestion seems to be developing something of a triangle pattern, more of an ascending triangle, not quite perfect, but importantly the upper barrier here may hold as very strong resistance because the market is trading within the Ichimoku cloud, and the opportunity for the buyers to break out of the barrier may bring into play the fact that anywhere within a cloud we could see strong resistance or support. So if we see the market attempt to break out through the top of this barrier, we could see selling come in just because of the fact that we are trading within the cloud. The downside breakout, and if we see any strong bearish activity down below the bottom of the Ichimoku cloud and strong follow through, we then could see the market attempt to build for an assault down through the lower barrier. But we can't preempt the market. Just because we have potential for resistance through the cloud, it doesn't mean that we won't see the breakout develop further to the upside if it does occur. What we need to do is react. We're talking in probabilities here for the breakouts, and it certainly does seem that if we do see a breakout below the cloud to the downside and then some strong follow through, we could see a greater probability of the market developing down below the lower barrier rather than above the upper barrier. In terms of the dynamics for this current candle, formation of a very small body denotes little price movement between the open and the close, or in net terms between the open and the close, so very small amount of momentum from the sellers as opposed to the large amount from the buyers of the previous day's trading. But more importantly, the market has closed up towards the high of the candle, suggesting that we've seen the buyers close with control as we saw for the previous day's trading. So this suggests that we could see the market trade higher if we are able to see the buyers breach through the 46.72 level of resistance, which has held for the last 3 trading days. As I've mentioned, very strong support down below around the Tenkan-sen 45.72 or 45.65 roughly, and then down at the bottom of the Ichimoku cloud. Looking at the bands here with NYMEX oil, and here we have the squeeze going on. So we're getting ready for a trending move. The squeeze denotes that cyclical movement that the market moves to, away from trending activity to congesting activity, and that's exactly what we're seeing. So what we're looking for here now would be a breakout in either direction, either above the upper band or down below the lower band, in either a bullish manner if it's to the upside or a bearish manner if it's to the downside, and then some strong follow through to confirm that direction. So still some time to play itself out here. Just watching for false breakouts too, so that's a bit of a worry. But with the congestion going on, we should be on the alert as traders, waiting for the development of some trending activity once the buyers or the sellers make their mind up. Next to wheat futures, and here the second last candle is the one we're analysing, and formation of a black body candle after some solid upside momentum, finding resistance at the 496.50 level. The buyers closing with control as we saw for the previous day's trading, so an opportunity here for the market to move higher, and we are just seeing that for today's trading. Some buying up above that 496.50 level, but possibility of finding some strong resistance once again at the 500 round number, as we saw here previously in the recent past. Watching the market as it develops up towards that area and looking for some selling to come in around this region. Now, if we do see any selling come in, then possibility of strong support down at the Kijun-sen and the Tenkan-sen, which extend down roughly to about the 486 level. Next to corn futures, a larger black body here than we saw with wheat futures, and we have more net momentum to the downside, so this is suggesting with the buyers losing commitment that we could see the market come off. But we do have solid support through the Tenkan-sen, the Kijun-sen, and down to this 376 level, so the sellers are going to have to be very strong to trade down through that support. If we do breach down through there, we could see the market trading down to 367.25 support, in line with the market being bearish in the longer term time frame. Looking at the Chica span, however, at the moment it is still up above the price action, so it's suggesting that it's not supporting the negative bias that we have in that longer term time frame, and suggesting we could see some support come in at these areas. Next to the US 30-year bond futures, and here we see some strong buying coming into this market today with a larger white body candle as opposed to the black body of the previous day's trading. We've got a fair bit of indecision in this market at the moment. We had a large up day, a large down day, and a large up day now. So the market attempting to make its mind up while it's now back trading within the Ichimoku cloud, and once again finding resistance at 155.27. The rejection from there suggests that that's quite strong resistance, and we could see the market come off as we saw with the day's trading prior to today. Potential for support at 154.27 level, and then down around the bottom of the Ichimoku cloud around 154, and with the Tenkan-sen trading just below there, it strengthens the amount of support around that area. The resistance at 155.27 should be watched very closely. If we breach up through there, potential for resistance at the top of the cloud 156.10, and just above there at the Kijun-sen at 156.21. To the bands here with the US 30-year bond futures, and here we see a squeeze going on here in this market as well, looking for some solid price activity. We don't know when it's going to occur, but we'll be watching for the breakouts and reading what the candles are telling us, whether they're going to be strongly bullish or bearish, and confirming that direction. But at the moment we have seen the upper band hold as resistance once again for today. Previous day that the market was strongly rejected from there to find support down at the bottom band. The bottom band may now start to act as support, the top band may now start to act as support, as we're seeing with this current candle as it's developing, but whether the market closes around that area and up above the upper band remains to be seen, so still quite a bit of trading to go. If we do trade back within the bands, looking to the middle band at 154.14 to hold a support, and then potentially down to the bottom band at 153.14. To the S&P 500 on the hourly charts, S&P 500 futures, and here for the trading activity that has just finished, we saw the market open around the Ichimoku cloud, selling off quite strongly as the bottom of the cloud and the Kijun-sen and the Tenkan-sen were breached. Then some moderately strong follow through for the market to trade down to the second pivot point support level, attempting to rally but failing at the second pivot point support level, and then at the end of the day breaching breaching up through there to end with an indecisive candle and some price rejection from higher levels. We have opened well down below the Ichimoku cloud, so looking a little overextended. The market is attempting to rally back towards the equilibrium as suggested by the Kijun-sen and the Tenkan-sen in the medium and longer term timeframes, but any rally may find some resistance coming in at the middle pivot point level at 1938 or at the Kijun-sen trading roughly about the 1940 level. Now if those areas are breached, we could see the market extending all the way back up to the bottom of the Ichimoku cloud, and with the first pivot point resistance level around there, we could see any further upside price activity halted around that region.